Hello everyone, and welcome back. Let's get straight into what global markets are looking like as we head into Monday's trading session. First up, the US market closed Friday with some very interesting numbers. The Nasdaq finished at 26690, the S&P 500 at 7757, and the Dow at 54036. All three major indices were essentially flat, moving less than 0.1%. But if you think that means the market was quiet, you would be absolutely wrong. The VIX, which measures fear, is sitting at 14.9, down nearly 7% over the past week. That tells us investors are feeling pretty comfortable. The 10-year Treasury yield is at 4.66% and trending lower, which creates a friendly environment for equities. The dollar index is at 99.6, which is on the weaker side, and the yuan is holding firm at 6.74 against the dollar. But here is where it gets really interesting. Look at the internals. The ARKK Innovation Fund was up 4.68% in a single day. Tesla gained 2.5%, Nvidia was up 2%, and MSTR, the Bitcoin proxy, rallied over 3%. What does this tell us? Money is not leaving the market. Instead, it is rotating out of traditional blue chips and energy names, and pouring straight into AI computing, innovative growth, and crypto-related assets. This is not a broad-based rally. This is a classic structural divergence. The indices barely moved, but individual stocks were on fire. Now let's turn to China. The A-share market showed real strength on Friday. The Shanghai Composite gained 1%, the Shenzhen Component rose 1.4%, and the Chinext was up 1.35%. What really stands out is that the Shenzhen Index is up 5.39% over the past 7 days, significantly outperforming the Shanghai Index. Growth style continues to dominate. The capital flows are pointing in three clear directions. First, A-share tech and growth sectors. Second, gold. And third, upstream companies in the US AI supply chain. Speaking of gold, this is currently the most clearly defined trend asset in the market. Spot gold is trading above $4,400 an ounce, and it is up an impressive 6.84% over the past week, pushing towards the $4,425 level. With the dollar weak and yields falling, global funds are clearly making defensive allocation moves into gold. This is a trend we need to watch very closely. There is also a new structural signal emerging today. We are seeing what we call weak beta, strong alpha. That means the indices are barely moving, but individual stocks are extremely active. We are assigning a 65% probability to this pattern continuing. If it does, we need to shift our focus towards bottom-up stock selection rather than waiting for a breakout in the indices. Sector-wise, the strongest direction remains AI computing hardware and semiconductor materials. Take AXTI, for example. The company surged 18% in a single day after reporting significantly better than expected second quarter earnings. The indium phosphide demand story is directly tied to AI optical communications and data center construction. Onto and MCHP have also risen more than 14% over 2 days. These names have both earnings and industry momentum behind them, but after such sharp gains, the risk of a short-term pullback is rising. Chasing highs here is dangerous. On the flip side, the weakest direction is energy and traditional cyclical weights. WTI crude oil is down nearly 3% over the week, the reflation trade is cooling off, and Dow futures are weak in pre-market trading. For A-share investors, Monday is likely to open higher and then consolidate. We give this a 55% probability of a constructive session. The Shanghai Composite is expected to trade in the 39.20 to 39.80 range. The key level to watch is whether it can hold above 39.30 in the first 30 minutes of trading. As long as the yuan does not weaken past 6.76, investors can hold on to their strong tech positions. However, if the A-share market falls more than 1.5% in a single day, or if Nasdaq futures break below 29500, then we need to decisively cut positions to below 30% and pause any new tech exposure. Let me wrap up with our core takeaway for today. This is not a one-way market. It is a market of structural opportunities and structural risks. The predictive power of the index level is diminishing, so what really matters is where the money is flowing. Gold and the AI supply chain are the two clearest lines of strength. Keep total positions below half, hold names with verifiable earnings, wait patiently for pullbacks, and absolutely do not chase momentum. That is all for today. We will see you at the opening bell.